What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Thursday, February 29th. All right, guys, so SPY here today, down 67 cents a share, minus 0.13%. A little bit of volatility here in the after hours, but when it's all said and done, it is essentially flat here after hours. Now listen, tomorrow is tomorrow is a big morning, okay, for the overall market. We get a lot of really important data, okay? At 8:30 a.m. Eastern time, that is 1 hour before the market opens, no matter where you are in the world. We get PCE year over year, PCE month over month, and then core PCE year over year and core PCE month over month. So PCE that's the inflation rate that the Federal Reserve cares most about. When the Fed says that their goal is 2% inflation, they're talking about core PCE year over year. That's what they're talking about. Now, not only that, but we're also getting at the exact same time U.S. initial jobless claims and U.S. consumer spending month over month. Now, the primary read that I'm going to be watching, and I think the market's going to be watching, is PCE. On all four reads, bulls, you're going to want to see all four of those come in lower than expected, ideally. And bears, all four as high as possible for you would be tremendously helpful to support your position. Okay, let's take a look here at SPY, starting with our volume profile analysis that we do every single day. By the way, I'm covering SPY pretty much every single day. If you appreciate the overall market coverage, of course, this is, an ETF that represents the S&P 500, please subscribe to the channel. My goal is 3,000 subs by the end of this week. I think we can pull it off. It's not going to happen, though, if you guys don't jump on board. So without your help, not going to hit my goal. But I appreciate you guys who have already subbed. But here on the 5-minute chart, I'm always looking at what were the most obvious moves in the name today. And then do we get big changes in volume that support that move compared to the moves around it? Basically, what I mean by that is there an obvious move with a huge change in volume relative to the volume around it that leads me to believe that the biggest, or more so, a big sample size of the market agrees with that move more than the surrounding moves? Okay, so let me just show you, because I know that maybe some of you didn't follow exactly what I mean by that. So we have like a bigger upside move and then kind of a dump, right? And then a bigger upside move and then a little bit less aggressive of a dump. If we look at the volume profiles, though, it is very timid. What you'll notice is that sometimes in the middle of the day, we'll get big spikes. Oh, wow. All of a sudden we had 4 candles in a row, 1.5 million per 5-minute bar, right? We didn't get any of that today. And I thought that was really interesting. Very timid. Now, what that would tell us is, like, if, for example, on this big upside move here, if all of a sudden we had 4 bars is just an arbitrary number, but, 3, 4, 6 bars of 1 million, 1.5 million, whereas the bars around it are like less than half of a million, that would be an obvious difference, right? That would tell me, okay, a big sample size of the market contributed to that move and agreed that the market in general, the ETF, belonged higher at that moment. And that would be supportive of a bullish thesis, at least one factor of many. Today, though, so now that you know what I'm looking for, there's just nothing to pull here. So let's move on. Let's take a look at the 30-minute chart and look at levels that I'm going to be watching incredibly closely as we head into tomorrow. So you can see here that compared to yesterday, we've actually given up both the 50 period and the 200 period moving averages here on the 30-minute chart. So ideally, considering these are within a really tight channel, I mean, that 200 period is only 0.13% to the upside away. I want to see, we've reclaimed the 50 period, first of all, in the after hours, but again, take that with a grain of salt. Things are just different in the after hours. The volume is so low that things get bullied. Even the whole market, even SPY can move around very easily. So I'm going off the close, right? We had given up both of those upon the close. Tomorrow, I would love to see a close above both of those levels from a bullish perspective. If you're a bear, you'd ideally want to see a fade away, closing beneath both of those, and actually starting to drag down, especially the 50 period, as aggressively downside as possible to add what a little bit more of what I would call a psychological barrier to the upside to support your bearish thesis. So now let's go ahead and move on to the 4-hour chart. You can see that 50 period is reasonably in play here. We are hovering right above that thing. It's approximately 0.5% to the downside away. So listen, any retest of that, bulls, we're going to want to see that hold as a support level. Ideally, you get a retest and then a pull away on high volume, a high volume bounce. Bears, any downside break, same deal. You want as much volume as possible. Really low volume bounces or breaks, just to me, they're not convincing enough. We didn't have enough participants contributing to that move or that change. Now, on to the most important chart of all, that's the daily. Okay, now we can see here, the daily paints the most obvious picture here. We have the all-time high at 510.13, and we're currently at right around 506. Now, the bigger, more obvious move is a test to 500. Understand that that's about 1.25% away. Any move above 1% on SPY is a more volatile day, but we've seen those moves happen more often as of late. The market's just been a little bit more volatile. We had an over 2% day recently, which was a tremendous move for SPY, just huge, not common at all. But being that it's 1.25% away to 500, it's well within the conversation. So is all-time highs. This all has to be within the conversation of a single day move because it is certainly doable, based on recent evidence. The all-time high is about 0.75% away to the upside. So here's what I'm watching if I'm a bull. Any downside test of 5, I don't want to give up 5. I don't want to go back to the 4s. A hold of 500 as a psychological support would be ideal. The move downside would not be ideal, but the hold would be ideal. More ideal, right? 505 as a support level would be great to utilize as kind of a trampoline to bounce up toward all-time high. And 510 is really what I have my eyes set on. I want to see a break and hold of 510 as a new support range. Bears, any test of 510, you want to reject hard as possible. Do not even think about an all-time high. 505 is your friend if you're a bear. You want to crack downside below 505, open up a potential move downside to 500, because if you're bearish on the S&P right now, or I guess on SPY, what you're really looking for, what you're really after, I think, in the near term, is a crack downside below 5, right? Because that would probably be the most discouraging thing that you could possibly pull off to bulls in the very near term, right? Is a break downside below 5,000 on the S&P, below 500 on SPY. So that's your goal if you're a bear. Bulls looking for a hard move up off 505, up toward 510. Now, what was the bias in the chain today? We always get a lot of volume on SPY in the options chain, so we can get some good data. What was the bias of traders positioning themselves today heading into tomorrow? So we had 6.8 million contracts traded. It's a pretty good sample size. And look at this, just about 3 million calls, about 3.8 million puts. So we are seeing a little bit of a put-heavy day. The short-term speculators, the 0 to 20 delta range, about 940,000 calls and about 1.53 million puts. So interestingly, what we're seeing is those short-term speculators, and I suppose also the overall call-put ratio, but especially those short-term speculators, we're seeing them betting kind of against an all-time high here in the near term. And that's interesting because with PCE tomorrow, that tells us a little bit of a story of how the options traders are viewing that. But I want you guys to understand, this is one factor, okay? And actually, if you get deeper in the money, this is really common on SPY because it's the S&P, right? Usually the higher delta you go, the deeper in the money you go. At the money is the mid-range deltas, and then you go in the money and deeper in the money as you get up to 81 to 100. The longer the average expiration date of those contracts is going to get, okay? So when you start getting longer and longer expirations on average, it tends to lean to the call side more often than not. Okay, and you can see at the money, the 41 to 60, and then in the money and deep in the money are all leaning to the call side here on SPY today. Whereas just a little bit out of the money is leaning put side, and far out of the money is leaning a little bit more heavily to the put side. So we're seeing the speculators, the more like gambly style contracts, leaning bearish, again, which is interesting. But the more mid to longer term contracts are leaning bullish, which is typically what I expect to see on SPY, though we have seen some variation in that as of late. So we'll see what we get on PCE tomorrow. Listen, if you got value out of this video, please subscribe to the channel. Also, guys, we did just add a new benefit for all memberships, Gold, Gold Plus, UOA, and Platinum. I'm now alerting all in-play stocks as they come into play. Those are going to be momentum stocks that fit my criteria, and I think the majority of momentum traders' criteria, because a lot of times what you'll see happen in these stocks is one stock will hit like every momentum trader scanner across the world, because I feel like we're kind of all looking for the same thing because it's what has the most edge, at least in that sector of trading, momentum trading. So you'll see the same stocks hit scanners all across the world, and everyone will rush over to that hot topic for like anywhere from a few minutes to a few hours. And then inevitably, the stock kind of slowly goes out of play while all the traders go over to the next thing that's moving and fits the criteria of elevated relative volume, fresh news catalyst usually, the proper market cap that makes sense for momentum trading, enough volume. The problem is a lot of traders don't have scanners, and if they're trying to like move on delayed data off the internet, it doesn't work for momentum trading because the scanners are expensive. They're not cheap. They're hundreds of dollars a month just for one, and like a lot of people, like I have multiple. So I'm just adding this in as just an included benefit among the wide variety of other benefits the members already get across all of the different variation of tiers. So you can kind of think of it as kind of like a momentum scanner. The things that I deem as are in play, okay, that I think a lot of traders are paying attention to right now. If that interests you, take a look at the link in the pinned comment. Hope to see you join, and I'll see you tomorrow.